Hello, everyone. Welcome back to another day in the Matrix and another episode, weekly red pill of the Daily Candle Close News, where I give you my chips all in and I lay my cards on the table with market psychology and technical analysis. We see the markets have been acting up pretty sporadically lately, and in this video I'm going to be breaking down how I'm perceiving what's going on, and also start out on a little bit more philosophical explanation behind bull run and bear markets and bull markets. I think it's something extremely important for us to talk about. Maybe it'll answer a lot of questions that some people have had lately. Maybe it's important to deconstruct some ideas of what some people have as bull market and bear market, because I believe it dilutes what's going on for people to be able to create their own investment thesis during big swings in a cryptocurrency market. And I hope this video will be very helpful and solidify some missing concepts that people might have when it comes to this idea of whether or not we are in a bull or a bear market. And I do want to start out by apologizing if I'm a little bit, soft voiced in this video. It's been acting up on me lately, and crackling a little bit, so might be taking a few pauses during this video or awkward silence moments. So I'll do my best to get through that. Sorry about that. Want to apologize ahead of time. But sending you all much love and high vibrations out to wherever you are in the world right now. Sit back, take your drink, get your favorite drink, your favorite snack, light up your favorite strand, and just relax as we just take a grandiose view of Bitcoin since its all-time inception of 2008 when it was under a penny, and just be amazed at the uptrend in price action we've seen since then. Something I just wanted us to sit back and look at. I'll remove the Bitcoin logarithmic growth curve chart and make it a little bit easier for you all to see. We saw a little bit of a low yesterday come in, down to $34,000 on Bitcoin on the 22nd of January, and we were prepared for that date. I've spoken about it a little bit in my last few videos. We know about the 21st and the 22nd, so very quick recap. We know going from Rosh Hashanah to this day, yesterday was 137 days, and we know that's the 33rd prime number. The other two important notes were it was a standard date numerology, giving us 11 on the 22nd day of the year, in the Hebrew year of 5782. And we just entered the 22nd year of the 21st century. So big connection that we've been making, the importance of this 22nd year of the 22nd century, and this Rosh Hashanah year of the 22. The 22nd always being an important date in time period of each month. So very important time frame. So yesterday we were ready for those lows. Anybody that's been watching the videos lately and learning to utilize the code, we saw some importance there, as to why we saw these lows in the market. So more of a more esoteric perspective and numerical perspective as to why these lows came in yesterday. Probably a lot of other things too, but something I've been warning people about this day for almost a week now, and we saw this day come into fruition. We saw what it did to the market yesterday, again furthering the power of the code, and that's something that I've been trying to express in my work. Something I think is very important, especially since our my bias call of December 4th and the markets didn't go quite as plan. I predicted my biasness and threw it in my work to which I shouldn't have, and I stated that since then. That I was wrong for doing that. But it's something that I was able to prove going back in time that the December 4th date was going to be powerful. I just thought it would be a $72,000 blow off top for Bitcoin, leading us into a bear market. Instead, we saw some downward action to 42K on that day, and I personally do think it's most important though to prove that this code works. Because there are so many technical analysts out there proving that this form of TA works and that form of TA works, or that this investment is a good investment over time, or this asset is a good asset because it's deflationary, or etc. Great hedge, whatever. But there aren't many technical analysts or content providers out there in the world trying to develop a skill and learn a skill that brings you the energy and volatility of certain assets, any one you choose, on days, weeks, months in advance. And that was the artwork that I wanted to learn how to do and provide for you guys, and the unique perspective that I wanted to bring to the table and share with the world. So I definitely hope that you're seeing this throughout my work, that it's utilizing to be very, very valuable in predicting the upcoming volatility in the cryptocurrency market. And I was happy to see a few people reach out to me lately. Going back last week when we made those important 666 connections around the 5th of January to the beginning of the C word crash. I had an overwhelming amount of people reach out to me because they were able to exit some positions and de-risk them before seeing this low, and that's encouraging for me to continue to do this work, to have people come out and say it's helping them. So we got to reassess what's going on right now, seeing something that we've never seen in the history of Bitcoin before, as well as breaking that 39K low that I told you we'd all have to come back and have this conversation if we were to ever do that. So this video is going to be based on that, but I do want to remind people that the people that get fixated on a certain timeline and date or whatever, and they get fixated on this or a certain price target, those people are going to sink when other people are trying to swim. And I'm not being disrespectful. I just want to give out the red pill. We need to be able to have a plan B and a plan C, and be able to go about this market and investing with a very long-term time horizon, and that's packed with multiple variables along that. And something in my work I've been trying to teach people to have that perspective and mind frame of playing with money that you're willing to lose, or money that you're willing to wait on for at least a year or 5 years when investing. These are just small things that I bring up in my work, but the biggest thing when people invest and they park their money in something, they're looking for something like a retirement fund, or something like a very long-term horizon that they can accumulate over time by dollar cost averaging, etc. That prepares them for the end game result, not the tomorrow or the next week. And that's what investing used to be. But since investing became this, I can buy a stock on this app on my phone. It's starting to get a little crazy. When I first started learning investing, I started learning from the OGs in the games, in the market. And that's people like Richard Wyckoff from back in the day, who was alive over 100 years ago. Back when paper was still on, trading was still on paper. And I want to speak about this Wyckoff accumulation schematic tonight a little bit, but I just want to share with you some psychological mind frames that we need to continue to check and keep our emotions on the sidelines. If we remember the end game and the big picture, then we're going to be the ones that have patience and are the ones that succeed in this market. If we don't get, sidetracked, we got to remember this market is basically ran through fiat and QE, quantitative easing, and central banks with fractional reserve banking who continually print money, which dilute the money supply, therefore making stocks and risk assets go up over time. This has not changed in over 100 years, and I don't believe it's going to. And I don't believe, you know, I just believe they're going to continue to kick the can down the road. We've seen them do it time and time again. Bull markets and bear markets are short-sighted, and I don't believe it's how we should perceive these markets. In my work, I'm someone that speaks out on the duality that they keep us trapped in this prison planet of good and bad, of right and wrong, of black and white, and red and blue, left and Republican, etc. And it goes for bear market and bull market as well. Again, I apologize about my voice. Anyways, I just wanted to reiterate the importance of don't get trapped in that duality. Um, it's so important. And anyways, for the people that really want to generate money throughout any of this, whether it's bull or bear market, creating businesses or buying assets that allow you passive income or properties, etc. All that matters is become an alchemist in whatever you do. If you rely solely on investments, then that's going to destroy you when you're investing, especially during a bear market. Investing is completely make-believe just as much as a bull market or a bear market or right or wrong or whatever is make-believe. Man creates all that. You create all that. You oppose the obstacles that you face in life. And the thing about crypto is, especially with retail involved and the everyday person involved, it's toeing the line of, keeping you on that brink of insanity. And you disregard the long-term setup. And the long-term setup with cryptocurrency and blockchain technology, well, it's without a doubt the future of money. So if you have any crypto in this market, whether it's Bitcoin or altcoins, it doesn't matter. It's all venture capital at the very end of the day. And just relax. We're still so early in this cryptocurrency market. Look at Bitcoin in 13 years. That is nothing compared to the 100 years down the road when our grandkids are controlling our finances that we left them because we were in this now. No one's ever been able to call a top or a bottom of a bear market. Period. I don't care what they say. And I can only imagine the sentiment around some of these times in history that we've seen these euphoric moments and these downtrends as well. When people would think coins would go to zero, and it did the opposite. And they thought they'd go to the moon, and then it did the opposite. So I'm going to be straightforward in this video, and hopefully that's respected among you all. That's a sacrifice, I do believe. I believe I sacrificed a lot of my popularity or whatever, the way people perceive me by just being so straightforward and not giving a fuck, being 100% authentic and speaking my truth. I think I risk a lot of my creditability at times as well, and I don't care. But I know I've probably brought a bunch of people in this community towards being the strongest they've ever been. And that's been my biggest goal, is making people the best that they can be. 100%. No sugarcoating shit. Be direct. Speak your truth. And manifest your reality. And if you see something happening or whatever in the market, share that. Expose it. Expose your truth. And I've learned a lot through making this channel, and I've learned a lot in this market, how sentiment drives this market. Um, I'm sure during the dot-com bubble or the, you know, housing market collapse of 2008-9, it was the same shit. People losing their shit all the time, calling for bear markets and bull markets. Um, we got to remember, this is a cyclical mind frame and cyclical cycle that they keep us trapped in. And we speak about the psychology of a market cycle that we cannot get trapped in. Their goal is to keep us in disbelief and depression. So pretty important. Wanted to just make sure I reiterated on these things. So I know I'm definitely being very philosophical, but I said I would be. And the majority of the content out there is not teaching anyone anything. And I got to make sure that I'm doing my best. The foundation of a lot of what's going on here is not education. It is drama and theater. Okay? And I'm trying to just be straight up and keep you knowing the game so you can't be played. This bull bear market is theater. No education. People need to seek education and learning, because when they actually learn something day to day, they're gaining a skill, and they can utilize that to help themselves determine and make their own decisions. And that is, the freedom of choice. And that gains them freedom of the dome, freedom of the mind. And that's so much power. That's how they become wealthy, because they're already wealthy and already powerful. And I've said this straight up. I want to be somebody who teaches people something, teaches them a skill, because my words, I say them that attract and only are heard by the ears of leaders, of teachers. And I've been trying to utilize that in my work so much. Teaching the meaning behind the numbers, or the code, etc. I believe everything I do intentionally, so that people walk away and look at the world differently, or have a few new things that they learn. If they can learn one new thing every single day, then that's 365 days of learning, 365 new things every day, and that's what this code has done for me. And I hope it does that for others. And from there, hopefully they can make the best investment choices like I've done. But very quickly, when we look at this chart, this weekly chart of Bitcoin going all the way back, show me the bull of the bear market, you guys. You hear the crickets? Because I'm waiting. Please. I want somebody to show me the bull of the bear market, because this duality of a bull and a bear market, and this conversation just needs to stop. It's what holds people back from actually doing anything with their life. You know what's on the other side of fear? Nothing. When you fear nothing, they have nothing to take from you. And I'm just being straight up, and this is a hard pill to follow, but where's the bull in the bear market? All this bear market shit we're getting right now is fear. I'm not telling people what to do with their money, or how to perceive this market, or to go long right now. But when you're really looking at this, it seems like the most patient person is always in a bull market. The person who learns every single year, every year, learning more and more and more, is always winning, because they're calculating how this is going, and they're seeing that there's a trend being built here, and this trend started at the bottom at 1 penny, and now it's at $35,000. And yes, since then we've had huge dramatic changes in the market, where China banned crypto, and Russia banned crypto, and India banned crypto, and Jesus banned crypto. And all this just has to stop, You're falling into the narrative, and we've made it so far, and we're so early. And anyone who's really here for the long-term game, then this bull and bear market conversation really needs to get sidelined, because It's not helping anyone. It's not helping you, you know? So I hope this really gets people, to really understand how this works, If there's someone out there who is just uncertain, or, someone who's ready to learn, well, then this is definitely for you, you know? Maybe you saw one of my videos before and you just started following, and, you thought I was some Las Vegas overdosed on cocaine investor, but I'm not, I know we speak about some wild things, but when I say the matrix goes deep and you take that red pill, it never stops. Morpheus was the god of dreams, god of sleep and dreams. His job is to keep you asleep. You take that red pill and you become awake, you're awake eternally. And, I utilize that in my work. But I want to build a community that thrives, where there's not one jack of all, not just one person with a skill, but people of, all trades, jacks of all trades, people that are making an effort to look at things that people overlook and to think outside the box, make an effort to give back to the community with their knowledge and their truths and their wisdom. And I do understand that right now, there's a lot of new investors in the market, and there's a lack of understanding how bull and bear markets work. And there's a lot of a lack of the conversation. And I'm ready to have that conversation, but I'm ready for people to be constructive and to understand that, how this really works. And, again, this is a fiat-based economy, and money prints forever, and the more money prints, the more everything else gets benefited by it. It's pretty simple, and this has not changed for hundreds of years. Even if they invent a digital dollar, which they are, with the digital dollar project and crypto for Congress, while Congress is out here and Washington's out here telling you, don't buy it, it's bad, it's for criminals, when they're the ones gobbling it up and have been the ones that have created it and are implementing it into our future monetary system. This will be an ever-inflating, government-ran system. They use stable coins. We know they created USDC. They use USDC. Now, whether this is added to special drawing rights or whatever, none of it matters. It will be the same concept as money, created out of thin air in an ever-growing population. That's how money was created in the beginning, and nothing's going to change. And with the red pill, and with all that being said, there are going to be new things that show up time and time again, and we're going to have to ride the wave of that trend. Bitcoin is one example of that. Crypto is one example of that. A winner amongst money systems. And the reason we can call it that is because it's went from basically nothing to have fun reading this percentage game. No coin has ever done this. Have fun. We can't make sense of it. Have fun. And if you want to dilute this down, we can say, yes, this was a blow off top, bear market. Blow off top, bear market. Blow off top, bear market. Sure, we could do that and have that conversation. I'm not against that, okay? If that's the way you want to perceive it all. But I just want, in the meantime, us to have a constructive conversation about this, or else it's fear causing you to make a choice to sell instead of being a long-term investor, regardless of whether we do get a relief rally tomorrow and start heading up to new all-time highs or whatever. Who the fuck knows, and who the fuck cares? Because when the people who get emotional when the market's down and get disappointed are the same ones that get excited when it's up. Okay? And then they get disappointed again and excited again, and it's a fucking emotional roller coaster. And it's tribalism, and I'm tired of it. I've stopped all that. And I encourage you to do the same as well. and don't listen to the news, and don't listen to narratives on crypto Twitter. Learn a skill, you know, make your own decisions. But the investors that have been doing this the longest, that have stayed through, you know, all of these rides, and I don't know of many people that have been in it since, here, but and that preach how to use a skill throughout here, and now especially if they were here, you know, I don't know of many people, so I want to make sure I came out and did that with the years of experience I've got in this market, and I'm learning every day. I don't know it all, you know, but I challenge myself to be the best that I can be. So, definitely wanted to preach that, you guys. But it's hard to kind of like give my 100% stamp of where we're at right now in this market right now, because crypto is so new, you guys. Even with 13 years of charting history, it is so new in this monetary system, and a lot of these cryptos are so new. And when we're perceiving things in this duality based of a bull and bear market conversation, it's really hard to say where we're at. Based on these highs or lows, or the probabilities that we've got, you know. Anyways, for people that don't want to actually learn and utilize a skill, then that's fine if you're parking your money. But it's got to be a long-term park, and you'll see in 5 years this shit's going to benefit you immensely, without a doubt. Any coin, if you look back, that's over 5 years old, you can see the proof in the charts. It's still up. If you bought the C19 crash, you're still up. Whatever you bought, I don't care. And we'll look at quite a few coins, but, and you can, buy into the Hail Marys and the shit coins or whatever, buy into the hype if you want. That shit does work for some people, but most people get wrecked. But we're seeing a emotional sentiment change in the market. Everybody's calling for a bear market. We know that. But everything's looking like a spring and Wyckoff accumulation to me, and we'll get to that later. But I'm pretty interested in this setup on the weekly right now, because I do believe it's gonna drain a lot of players at the market. Even I've called for a bear market, possibly, with a weekly close under 40K, and we got that tonight, you guys. But that's something I want to talk about before we confirm that bull market, bear market duality. Correct? We remember this December 4th time frame sentiment change, where a lot of majority of the players left right here. Then they got bored out, and then another flush out that we're witnessing right now. I believe this flush out right here could possibly fill the CME gap down here at about 33, and we'll see that tonight when CME opens. We could get a feel of this 31K, and from there we'll see how this goes. But we're essentially back testing these support levels that we've essentially had back throughout the summertime, and when Bitcoin made its first breakout on January 8th to 42K in the year of Saturn 2021, you guys, with a 21 million coin supply. So we didn't get balled up by the end of the day. So this weekly close closed on a new closure below the lows of Rosh Hashanah. So this is a break of structure and a confirmed trend reversal that we've been in for 73, 74 days now, you guys. We've broken structure definitively, confirmed it. So because of this sell-off right here, and because there is yet to be any relief rally along this dump, this is sort of where we can anticipate a short-term bounce, especially where the RSI is reaching oversold territories on the daily. And I'll show you that in a minute. But since the real structure of this pattern comes in around 31K, we could see this come all the way down and then bounce into a dead cat bounce that we've talked about recently, unless more dominance comes back into Bitcoin, which, I wouldn't bank on too much during this stage. But if we do look at the Bitcoin dominance really quickly, we can start to see it's at a nice pump, and it's starting to head up. setting higher highs on the RSI as well, with higher lows. So, well, setting its first high and possibly another higher high. We'll have to see if it breaks this median of the RSI on the Bitcoin dominance chart. So we'll have to continue to keep an eye on that and see what it does. But this flush out is not completely weird, because we know crypto is highly volatile, and it's done this before where it's had weird anomalies and it breaks every technical pattern that you put on the charts. And it has this, this run up with this long, consolidation range, like back in 2017. It had this long run up, downtrend, and then a breakout. I'm not anticipating that's what's to happen, but we could take note of that. It wouldn't be weird of Bitcoin to do that, have a bump up to maybe the mid 50s, low 60s, being in alignment with a dead cat bounce, which is things I've shared before that would give us the juice when going back down for an alt season. So something we need to pay attention to, and I'll break that down deeper later, but I'm just bringing up some things right now. If we can see it do that, and it starts to move into the 50s, 57, 56K, 58K, 60K, that can bring an alt season, absolutely. And that's why I wanted to bring that up, especially on things that are suppressed like XRP, but this is actually still a higher low in the structure right now. And I'm not giving hopium right now, I'm just sharing technicals. And I know you're talking like, slow down, John, but I'll make it very simple. Since we broke below our lows, this is a trend reversal into a bearish downtrend. But we've been in this downtrend for 2.5 months. And since we've had our highs, we now came down and started closing lower than our prior lows. But we are still having higher lows on a macro outlook when we zoom out. So we're still holding a bullish structure when we zoom out. Okay, so this straight line breakout that we've been seeing with no relief rally is very awkward. This is not, this is not usual. This is very much like, let's go back in time real quick and look at the C19 crash. This is very, very simple, organic synchronicity playing in the cards right here, I do believe. We just talked about recently 666 day connections to our January 5th, time frame where we got, some new news around this psyop we've witnessed for the last 2 years on the world stage. So powerful connections right here. Could we see 2020 playing out all over again? We'll have to see what happens. I don't want to feel hopium in the air right here, and but I'm just sharing with you some important things. But very similar to like this right here. For instance, the RSI on the weekly is about 35, 37, breaking below the structure in the summertime with a slightly higher in price, by the way. When we saw the C word crash, it came into about 33, so could we see it go a little bit lower? Possibly. That would make sense filling in the CME gap around 33, 31K. We got to hold that 29K though to confirm higher lows in the structure. But this structure, I do want to say it's really bad, because it's not even holding the 236 fib when we pull our April fibs from swing high to swing low. Here's our CME. So we could close this gap if we come down here and bounce back up. We can get bought back up to the 236. In the morning we'll have to see. Tuesday the Feds talk again. We'll have to see what happens there. This is not the greatest thing in the world right now, but it's not weird for Bitcoin to have a dramatic sell-off during these time periods that we've talked about lately, and the manipulation during the biggest ritualistic time frame of the year, the 51st, 52nd week of the year, Christmas, etc. None of this is not normal. Okay, and I just want people to know that the sell-off and the way it's been going, this is not the typical way a bull run ends. This is a very, arduous sell-off, and this has been going on a lot longer than our Rosh Hashanah time period leading into that after our double eclipse period. This is something we've never seen before, so I wanted to reiterate that, throw that out there. It's just stair stepping down, and we've got to have a bounce, point blank period. We cannot continue to go straight down. So some altcoins have remained straight, one of which is Ethereum, a really good sign. It's been holding the 236 level if we look at that, so that's very important. I want to reiterate that. We could see it come down to $1,400 if Bitcoin falls, continues to fall. And why does that make sense, you guys? Ethereum gives us, well, let me pull up all ciphers. It gives us that 14, okay? ETH, the ticker, Ether, the upper ear that the gods breathe, giving us that 33. So, we could see it rally back up to $3,300. So I don't want to get too invested in the code right now, but holding that 236 is a good sign for Ethereum. Some cryptos are not entering a spring in Wyckoff yet. So this is showing me a lot of the bull run might get extended out until months of March, April, early May. Sell in May, walk away, very typical. The straight fall down, just not normal. We're probably going to see a bounce, and I hope my Year of the Water Tiger shows why we see a bounce heading into February or throughout February, a trend reversal. But I want to, let's see, look at the Bitcoin logarithmic growth curve chart. We know we fell below the 236 level and fell straight and are holding support of the next level down. The last time we touched this was back in Thanksgiving area of 2020, and I've shared that lately in a video. So could we see this fall all the way down till our C19 crash where we fell below the Bitcoin logarithmic growth curve chart? It's possible. I don't want to call that because, again, we would need to hold that 29K structure, and that's actually where the bottom of this Bitcoin logarithmic growth curve chart comes to it near the beginning of February. So the February new moon I'm watching closely to see what happens. If they're typically bullish, the new moon. So between now and the new moon, do we test this bottom and hold it as support around 29K? Do we continue to move sideways and choppy and test this area in just a drawn out period like back here? We saw our lows come in after an automatic rally throughout the summertime and then back down to set the low before being bought back up into a sideways and down period. Could that be what's happening here? Our low coming in the structure before being balled up, having another bull trap into a sideways and down, but ultimately holding a 29K low, setting a higher low in the structure, filling out this trading range that we seem to have found ourselves in for, well, you guys, heading into February, March, that's over a year. So right now we're definitely just breaking a year. We've been in this sideways macro view trend for Bitcoin. So very important. Some things I just wanted to bring up there before I got rid of this Bitcoin logarithmic growth curve chart that it's something we need to keep in our minds. There's some important levels and technicals playing out there. We'll bring up our SMAs. Boom. And we're going to adjust these real quick to the 8 simple moving average to 55 as well as the 200. Okay. We're going to go right here. We're going to hide this EMA1. We don't need it. It was set at R20. Don't need that. And then boom, we're good to, oh, hold on, sorry, I'm gonna remind you all to always hide these buy sell signals. We don't let someone tell us when to buy, sell on our charts. We do that ourselves with, why ain't they hidden? There we go. So just hide those as well. We don't let someone tell us what to do. We don't pay for a bot. We are the bot, you guys. So and anyways, we got our exponential moving averages. We're set up right here. Okay. Okay, I hit the wrong one. But something I want to bring up right here, this is not good. We got the 8 crossing the 55. It's below the 55 on the weekly right here. So 2 weeks in a row of having that. The 8's the red, the 55 is the blue, 200 is the yellow. So all of this trading, right, or I'm sorry, blue is the yellow, 55 is the yellow, 8's the red. So that's not good. That's a bearish cross. I teach you pioneers on the channel, so that could come, all the way down, here. Yeah. Oh yeah, I totally screwed you guys up. That's why this ain't making sense to me. I'm terribly sorry about that. Let me hide this. That's what that is. So on the weekly time frame on Bitcoin, that's why that one making a lot of sense. But this is our 200 exponential moving average, and downside implied. We could see the price action come all the way down here, and I know you don't want to hear that to around 16 to 20k. That's typically how a bull run ends. But again, bull runs don't typically end in fear. They typically end in euphoria, which is why I do believe this is nothing more than a sucker's rally. Okay, point blank period. And I've shared that before, going back in time with the Wall Street cheat sheet using the Aussie and I here. And I stated a couple months ago, I remember quite vigorously, I stated in one of my videos that this is nothing more than a disbelief rally and a sucker's rally that we were heading into. And we'll have to continue to see how this plays out moving forward into February, March, April, and May. Sell in May, walk away. Probably it'd be better off, exiting the market in April. We'll see how it goes. Not financial advice, but just giving you all my perspective on the market after being in this for years. I'm listening to everybody telling me to get out of the market, and people that aren't even invested in the market telling me that to be careful. And it's just like, yep, really market manipulation at its finest right now. I can really tell. But on the weekly time frame, Bitcoin's RSI setting at again 37, reaching oversold, underbought territories. So we'll have to continue to see what happens if we hold this 29k low, and if we close this CME gap tonight when CME opens. It's open now, it should be. But yeah, important time frames. But that's a bearish cross that I teach you pioneers. The 8 crossing the 55 moving average. And we're watching this 200 on the weekly. But I'm not saying that's what will happen, but that's technically how much lower Bitcoin can go in the event that this level of 29 and 31k does not hold. Getting back down to these levels would not be completely at the card, closing this gap that we've been talking about. Such things would cause a full-blown crypto reset. Like basically the entire chart would reset for everything. All altcoins and cryptos. And that's the kind of thing you want to set up for the next rally. And I know that sounds awful to see Bitcoin come down to 29k or 31k, but we've shared why it would do that using the code. But it would be a good thing for us, considering market participants and weak hands. There would almost be nobody left. They're gonna panic sell. They're at a loss. It blows my mind. But this is a time where cryptocurrency basically resets, you guys. And I hate, nobody likes to hear that. Even when I said this would be a 200 drawn out day period. Like, we're kind of back in that situation, you guys. Nobody wants to hear that. But this is accumulation at its finest of the uncommon 1% and the market participants and the market makers. So, we just want to hold these time frames. I'm going to go to the daily time frame. And pull up some fibs. Yeah. So yeah. Mm. Our 55 just crossed the 200. We've talked about that recently on the simple moving average on the daily time frame. Look at this bounce on the RSI we're getting already, though. I'm not going to say how much of a bounce we'll get right here, but we know this is oversold, underbought. We don't hang out here long. So, already forming our first daily candle green yesterday on the 23rd, that 123 date in the 222 year. And, I've spoken about that date in my video recently. So, very important right here that we pay attention to that, you guys. But let's pull up some fibs from our April highs down to our swing lows. What is that? It's not a fib. Our Fibonacci retracement and extension tool. We're going to pull that down to our swing highs and swing lows of April. I like to do that from our recent high, even though our high came in here, we were pulling our fib before from here. And this is not good, you guys. We can't hold the 236 on the daily time frame. Not good, but we are holding this trading range going back to June and July. So this could get worse. It literally could. And this has everything to do with how the traditional markets are going to open up tomorrow, I do believe. They're not looking great. If we look at the S&P 500, we're seeing signs of weakness. And we can see that right here on the Dow Jones. It is trying to hold these levels, and it needs to recover from here. Tuesday, the Federal Reserve is talking, and I stated that earlier. They're having this conversation of whatever the fuck, nobody cares, and hopefully they bring the market back up and whatever the fuck they say. We know when they speak, it tends to affect the market sometimes, and when it's down, they tend to like to encourage it to come back up. It's amazing how that works. But we know crypto is highly correlated to the stock market, and this all correlates with the market just having to have a red day on the 22 of the month on Saturday with retail involved, liquidating a bunch of unsophisticated traders. This is clearly a setup for a red weekend in crypto. And it's just all making sense if you really utilize the code and pay attention to the work we're doing here. Hopefully Tuesday's kind of where this market wakes the hell up, but the S&P 500 overbought, undersold, underbought, oversold territories on the RSI. Come on, you guys. Back testing the 200 exponential, simple moving average. Like Dow Jones doing the same thing. Got to get back above it. Like, come on. We see it do this before going back up. So let's see what happens. But back into the S&P 500 really quickly. But if we zoom out, like look at this. As we were talking market psychology and sentiment earlier, look at this uptrend. We finally broke back below this uptrend, just like back in the C19 sell-off. You guys. I mean, look at the trend. Going back in time. Yes, there's dips and valleys along the way. Yes, there's a blow off top there. Yes, it looks like there's a blow off top there. Yes, but ultimately it's an uptrend, right? So, of course, right now we've been getting into supreme bubble territory with the stocks. And I've already told you we should not be weirded out by a stock market crash in the year of 2022. And I've told you this for 2 years, especially around October, November of 2022. This trend right here, yeah, we're down right now, but we'll have to pay attention to what happens. It's hard to really determine the bear market right now. It's hard because anytime in anybody's lifetime, when they put money in the S&P 500, they're pretty much up, right? If you take the year you started working, say right here, you're in profit. I'm just saying, unless you're 15 years old, right here. But if you take any time you started earning money and put it in the S&P 500, then you're up, you guys. So that's something I wanted to remind you of, So the stocks I'm watching very closely right now. But yeah, anyways, I'm sorry. I just wanted to share with you the indices when zooming out and seeing what the market really is. Putting money in the market, not panic selling at the bottoms. Um, that's not the way to go, you guys. That's not how I invest in markets. And I've been in the market long enough to be able to come out and share with you guys my long-term investment thesis that I built and I designed, that I encourage you to do the same. And it's the same I share in my work and the same I share in my course that I'm making. The way I perceive the market, I don't get so worried about the day-to-day movements of crypto, okay, or the weekly or the monthly movements. Crypto does these downtrends and recoveries in half the time as the stock market, okay, and I want to remind you all of that. And the ROI that it recovers is like 10 times more. So you're in the winning asset class when it comes to patience. You get to have the least amount of time on the market when it comes to result. I mean, how much more lucky can you be when you invest 2 years ago and you're still up now? Or when you invest now and you're up 5 years from now, no matter what happens then. You know, so I'm just saying, when crypto recovers, the ROI is usually 10, 15, 20 times more than the stock market. I want to remind you of that. You get to wait less during the worst part of it, and you make the most when it recovers. So, it's just a perspective. That is it that I'm sharing, and I hope that really helps some of you tonight. It's what sets people apart from being a gambler or a sophisticated or investor. The overall thesis in crypto and Bitcoin is going to determine right now what happens tonight and tomorrow morning when the CME gap opens that I had shared with you guys. I thought, yeah, right here. They do matter. They're not something I put all my weight and money on, but they do have purpose. They tend to close more than they're left open in crypto, dating all the way back 9+ years. So this would make sense to me to continue down a little bit moving forward. Maybe we come up for a little relief rally into a dead cat bounce anywhere and come back down for another low that ultimately holds a higher low over time. But we do not need to have a full feel of this gap neither. We need to have a partial feel, okay? I want to remind you of that. A partial feel will be get the orders out, not everybody, and then lead us into a trend reversal. But this gap that feels, if it does, will have a lot to determine which way we go, I do believe. We'll have to see how that plays out over time. The structure from high down to low to a new all-time high down to low, it's pretty much the same, showing me reminiscence of three pyramids of Egypt potentially playing out here, you guys. So I want to see how that plays out. But I know this movement from this high to this low was about 56%. Not surprising, right? Very similar to right here, you guys. And we know that that's pretty close, you guys. So that 31K could get us down there to that 53. That's a very symbolic number in our work right now, and you guys know that if you follow my channel. But this 56% led to this. So what could this lead to? And that's something I want to remind us of. When we look at things like theta right now, and we might speak on this more later, but when we look at theta and we take a look at our Richard Wyckoff reaccumulation after decline, a lot of things are looking like they're in a spring formation leading into an automatic rally of SOSs and LPSs, last points of supply test along the way before setting a trend reversal. So that's something I want to remind us of tonight. When we look at things like theta, that had a huge buying climax that was followed by an automatic ABC correction into a selling climax that had an automatic rally out before setting a low, before eventually setting a spring, is what I do believe we're doing in theta. Look at XDC, you guys. Down here, potentially setting a spring after its buying climax, ABC correction, selling climax, automatic rally before setting a spring. So very important, following below here, setting the spring. Let's see how far we go down here with XDC. But look at silica, you guys, potentially setting a spring, you guys, and Wyckoff before an automatic rally out. So when we continue to look at Bitcoin and we talk about the possibilities of a dead cat bounce, most of the liquidity will probably shift into the altcoins if we get that. And we've talked about this possibility. I'm sure a lot of other people who are analysts probably agree with that idea. Falling down in a straight line through every support level is not typically how things go. You have bounces along the way. And that's very, very bullish for the altcoins. And that's what's not weird. You see, you had people selling it off for tax loss harvesting at the end of the year, etc. right now. So all this makes sense using the code and paying attention to finance heading into the new year, the quarter one, weak hands right here. People selling everything. That's all we need to know. More longs entering the market right now than shorts, and that's important too. People are longing into this dip right now. The uncommon 1%. That's where the interest is at right now. And there's way too much leverage in this market, so that plays a role in this cascading effect that we've had lately. Okay, I won't deny that. Unsophisticated leverage traders that get leveraged out of the market and lose their money and their houses, etc. And now they're, some of them, they're homeless or selling their possessions or stuff. It's sad because they don't choose to do any research. Okay? But anyways, if when we pull up our dead cat bounce that we've talked about lately, in a few red pill videos, we see from our swing high rejections to our low, then we fell all the way down to every retracement level. This was not our CME gap. Don't get that confused with the last chart we were looking at. This was the Rosh Hashanah lows we were wanting to hold as support right here, which we fell through. Okay, liquidated on the 22nd day of the month. Our low came in, a reset, recycle, change to the market. So important. But anyways, cryptocurrency, when we're perceiving the market and why we get these Q1 big moves in the market, well, what I believe is since the introduction of cryptocurrency was designed for the elites to have their system of moving around money in a different way, practicing that in a full decade before they released it to the public. And I don't believe we're quite there yet, but I believe we're very, very close, you guys. So what I'm saying is the elites have invented this as a money system for them, and they had us in this market participating to test out the waters, okay? So they can develop all these systems, QR codes, move us into the digital economy, have stable coins and Tether. We know the government uses USDC, as I stated earlier. That's fact. We've exposed it. Boots on the ground. But we know the governments are using these things and projects, Crypto for Congress, and the Digital Dollar Project, etc. But the purpose for this is because they fucked up. You know what I'm saying? Their fiat system is crashing, it's failing. And they're entering a hyperinflationary period that's affecting everything that they need to do too. So it's part of their way of hedging, crypto is. And I want to remind us of that. I'm not saying that more countries adopting Bitcoin is what's necessary for us to facilitate a recovery. Because what really will make these markets recover is becoming a long-term investor and building a mind frame. Or else we're going to continue to have people panic selling and selling their bags at market lows, where we're at now. I'm not saying this is a low, but how far can we keep going down before a bounce? But if we could just see crypto lose the drama, it would become a more mature asset And that day will come, but it will only become when the average person is either priced out of the market or they no longer have access to investing in the market easily. Right now, the investor can invest very easily to retail, and that's a problem because they have no experience, no mind frame when it comes to understanding how experienced they need to become when they invest in the markets, thinking they're going to become rich. But anyway, when we go back to Ethereum and speak about some of these things, because this dead cat bounce could bring some liquidity into the altcoins, like we were speaking about a minute ago. It's going to be important to hold this level of support around the 236, this previous level of trading range before we had this W pattern breakout. When we go to our previous bull run for Ethereum through June and July through 2017, we see a kind of similar structure playing out. We had a sell-off into what looked like a W pattern breakout before eventually leading to a new all-time high. Very similar to right here, correct? Before a W pattern breakout before another sell-off. Another sell-off we were getting in Ethereum right here before another all-time high. So very similar to our sell-off in May and now. Back here, sell-off in May and now before our final run-up, okay? This final run-up would top us out around 14,000 for Ethereum. Why would that make sense, you guys? Because we shared this, okay? During this period of time, that's important, okay? So something I want to reiterate right here on Ethereum and how we can potentially compare 2017 and 18 to how we can continue to see this play out over time, not today, not tomorrow or next week, May, April, March, etc., or maybe all the way into September, August. September Rosh Hashanah ends, the new Shemitah, the Shemitah cycle started last year, it ends. So, anyways, let me clear my throat, you guys. Sorry, I'm on my... But anyways, very important. Just wanted to reiterate this. Let's pay attention to a potential move up into this golden pocket area before another retrace down and moving up. Let's pay attention to a bounce in crypto right now. That is short-lived, okay? Just pay attention to that. So using Ethereum to base everything right here, right now. Don't suggest you do that. Boom. I want to touch a little bit more on this dead cat bounce before I got off here tonight, you guys. Something I've brought up lately in my work, and that's pulling our fib from our recent rejection point of around $60,000 right there, and we'll pull it all the way down to our lows. This is, like I said, on the daily time frame. As we look at the RSI down here, we're in pretty oversold, underbought territories, and this is showing me signs of a bottom, just using price action in the RSI, amongst a lot of other things. We've been in this obvious downtrend, and we know the market can't continue to keep moving down. We've reached some pretty dramatic low levels of previous lows, and we tend to see markets bounce when we get to these areas, of previous lows. They tend to set a trend reversal using so many indicators. I could prove this, but I'm just going to keep it short and simple. And that's we could possibly be setting let me get my brush so I can draw for you guys. Alright. Well, I don't even know where it's at. But we could pretty much be setting a trend reversal and moving up anywhere into a 0.5 fib around 47K potential rejection area if we get past that 43K possible resistance areas being built around these places right here, around 42, 43K. Pretty important area. Why is 42 important? That's where we first broke out to in 2021 on January 8th, that very symbolic 1-8 day, and we talked about the power of 18 on this channel. So 42K, resistance, held a support, fell through support, so could expect resistance around 42, 43K. We could then, if we break through that, move that up to a potential dead cat bounce before seeing an A, B, C wave come in for potential lower lows to around 29K moving into the beginning of February. This would happen quickly. Okay, pay attention to this dead cat bounce scenario. Come in within the now in the first full week of February, I do believe. Possibly leading into the middle of February, we'll see. As well as then if we break that 50K, 47K where we don't get rejection from, we can see this potentially, crypto's very volatile, come as high as the 888 and 58, 60K. So I'm really watching 56 to 52 to 56, 58K for this potential juice in Bitcoin to come in for a B wave of a ABC corrective wave. If you're someone that likes to use Elliott wave pattern theory, then you could draw a 1, 2, 3, or an ABC corrective wave. A, B, C, possible. If you're someone who likes Elliott wave theory and ABC pattern theory. I respect that. This could be the first ever macro from beginning till now, from the inception of Bitcoin 13 years ago, ABC corrective wave that could take us all the way back down to, possibly 20, 16 to 20K, around that area. Possibly. Have to see how this plays out. We know inside an ABC corrective wave, inside the A wave, we know typically there is, there's an Elliott wave 1, 2, 3, 4, 5 pattern. We could draw that 1, 2, 3, 4, 5. Zoom where you guys can see that a little bit better. But we can see that right here, 1, 2, 3, 4, 5, and then we know inside of a 5 wave, there's also a 1, 2, 3, 4, 5 pattern as well. So something very important that we can show you right here as well. So alright, here we'll just delete that one. That made it so much harder, didn't it, you guys? But inside this, we had our 1, 2, 3, 4, 5 wave. Inside this 5 wave, we know there's a 1, 2, 3, 4, 5 wave being set inside the 5 wave, creating our full A wave. So again, multiple scenarios showing me a potential bounce coming in at the bottom of this level right here. Could we fall to 29K now and hold it as support before the bounce? Yes, but ultimately we're at areas where we tend to see a trend reversal come in. Probably going to leave that here tonight, you guys. Hopefully I've been informative and shared my biased outlook on where we're headed next into the beginning of February. Hopefully my February year of the Water Tiger fast forward into February video has enough confluence in it with all the work I've done lately to show just how ritualistic this could be and how manipulated this time frame could be, and how we could look back in a month or two from now and see this as nothing more than a buying opportunity, not financial advice. So with everything being said, take care, God bless, and we will see you in the next one.